Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of ChargePoint, ticker symbol CHPT. And so I am recording this on Saturday, March 2nd, following the close on March 1st, closing the week at a price of $2.08, being up about 0.5% on the day. But if we look over on the weekly time frame, being up almost 10%, about 9.5% over the course of the week. So looking pretty good there. As you can see, we have had the series of candles coming up. However, one thing that is concerning, since this uptrend has followed this series of red candles, it is quite possible this is a bear flag that is forming before earnings that will be reported in the after hours on March 5th. That is Tuesday. And I have to say that I am unfortunately at work at that time, so I won't be able to stream it, but I would be happy to stream the earnings the following morning on the 6th. So if you'd like to see the earnings call, if you'd like to listen to it with me, I'd be happy to do that on the morning of Wednesday, March 6th. So just let me know in the comments down below if you'd like to tune in for that, and I'd be happy to stream it. But, leading up to earnings, I do think it is pretty important to be paying attention to these levels that I've highlighted here, as well as some Fibonacci levels that I will go over to be able to get an idea of whether or not we are respecting support and potentially going higher following earnings, or if we might be breaking down. And so there are just a number of levels to the upside and the downside that I think we should be paying attention to. And so first I'm going to go over the levels that I've drawn, and then I will go over the Fibonacci levels, which I've grayed out, and I'll just bring them back into picture. And so here, looking at the chart, what we can see is it does look like we have a couple topping wicks having been formed, hitting a high on Friday of $2.14, as well as a high on Thursday, February 29th, at a price of $2.15. So it does seem like there is some resistance there, and we will want to be closing above those levels. But I think it's most important before earnings that we hold support. And right now, what I see as support is this red line here at $2.03. I've gone over it a number of times on the channel, and really being that level and $2 a share just being a psychological level, I think it's going to be key for price to be above those levels before earnings. Also, that does look like it is just above this uptrending level of support that did act as a couple bounce points here on November 28th as well as December 1st. Did get a couple breaks below that level, and we have tested it many times, but I do think that is a level to be paying attention to. But if we do break below 203, $2, or this uptrend, the next level down that I do see is really this orange line here at $1.88, which did act as support on February 23rd when we hit a low of $1.88, as well as on the following Monday, February 26th. So if we do break below these levels, I do think we might find support there. But one thing that does strike me as a little concerning is this purple line here. Really, I'm just connecting the low from February 6th to the low of February 23rd. And so I'm just thinking that if that line were to be connected over here, that could potentially be creating a head and shoulders pattern with the right shoulder still needing to be formed. So if before earnings we do return to this level right around $1.90, I do think that could suggest that we will be seeing a move to the downside following earnings, potentially to fill this gap here at $1.76. But we could go even lower. And so one way we can get a sense for how low the price could go is if we take a measurement from the top of the head here, right at $2.37, and bring that down to the neckline. That's a move of about 50 cents. So if we do move that over to where we might be breaking the neckline, we could get an idea of where price would go. And so that could be bringing us down to a price of right around $1.40. So that's something to keep in mind. I hope that doesn't happen, but it is quite the possibility. So I do think it is good to prepare for that if the stock price is looking weak, looking like it might break down, we might be going to $1.40, surpassing the previous all-time low of $1.56. Really, hopefully we don't go lower than that level. But then if we do look strong before earnings, what are some potential levels to the upside? One level that I have marked here is $2.22 with this orange line. And so I do think that is going to be a pretty important level. It does correspond to top over here, wick high of February 20th. And so, that is a level that we might be going to. We might get some resistance there. And if I do throw up the volume profile and actually take a step back, it does look like the volume does pull back a little bit there. So if we can get above $2.22 and close, let's say above $2.26 or so, I do think that could be acting as support. And really, ideally, if we can get above $2.42, getting above these highs, I do think that could set us up to go much higher, potentially like getting up to $2.73, where we really start to see volume taper off here with this nice little shelf here, this nice little ledge that we could find some support on before potentially making our way back to $3.03, which was a gap that was formed here. While we have filled that gap, it would be nice to get back to that level and reclaim it and start moving higher. But moving forward with the video, I'm just going to go over some Fibonacci levels and just wanted to bring them back into picture one at a time, so this is not such an overwhelming chart with so many drawings on it. So here I wanted to do this retracement first, just have a few levels on it, 156 as the low, as I had mentioned. And then also I do have $2.11 here marked based on the 236 level, and that does appear to have acted as resistance over the past couple days. So I do think that is good to keep in mind. We did get a couple wicks above that level, but we were not able to close above it. So ideally we can get a close, multiple closes above $2.11, showing some strength before earnings, but really at this point we want to see closes above these wick highs, and so that would be, like I said, $2.15, which was the high on February 29th. And then also the high from this candle over here that was hit on January 24th, that is $2.28. So that is a key level as well. However, since we do have the two highs here forming a double top at $2.37, that really is going to be the level that we want to be getting multiple closes above to show some strength before moving to higher levels. Then the next retracement that I want to do here is based on this run up here. And so if I just bring that back into picture, we'll get a few more levels. And one thing that I found really interesting about this one is that the 50% level is exactly the same as the 236 over here at $2.11. And that was notable resistance so far. So I do think that is good to keep that in mind. As I had mentioned, $2.37, key level with both of these tops up here. And then this low before that run up was $1.85, being just below $1.88. So another level to be paying attention to. That might serve as support if we do dip down there. And if we do, as I had mentioned, that could be the formation of this head and shoulders pattern, which is fairly bearish. And then from this yellow retracement, I do have the 1618 extension, which goes down to a price of $1.52.9. That is another level that we might want to be paying attention to, and that would be an all-time low if we did go down there. So something to keep in mind. And then finally, I've got this one last retracement over here. And so this one, I think will probably be most relevant because it does include the most recent price action, again with 188 being the bottom there, and then also the 236 here at a price of $1.99.6, right around $2 just being a psychological level. I do think we want to see our closes definitely above $2 a share, and if we start to see Monday and Tuesday closing below $2, that could suggest some weakness that we will be dropping following earnings. However, it could also be a fake out, so do be careful there. Then the next level up is the 382, and that is at a price of $2.06.7. Currently, that does look like it is acting as support. We have had 2 closes above it, but with Friday's candle, that does look like a reversal signal, potentially a reversal doji or spinning top. And so we could be seeing price pulling back on Monday, but hopefully we get a bounce off of either 203, $2, or this uptrending level. So that is what I'm hoping for if we do see a pullback. And then just above that, the 50% level is at a price of $2.12.5. Again, another level acting as resistance. Hopefully we can get above that, getting some closes above it before moving higher, unless of course that is a fake out. And then looking on the bright side, I suppose, I did include the extension from that going up to a price of $2.67.3, which does seem to coincide with this green line here at $2.73. So hopefully price does get going up there. But as I did adjust the y-axis, you might have noticed these extensions down here, the 1618 from this retracement at a price of $1.11.5, and the 2618 from this retracement being at a price of $1.09. I mainly wanted to put those on here to see if they would coincide with this measured move from the head and shoulders pattern. They do seem a little extreme, but I do think that if we do start to see a head and shoulders forming, a completion of this shoulder, it is quite possible that we're coming down to $1.40. And if that's the case, we might be going down to $1 as well. So that is not what I am hoping. I am hoping that following earnings, we do see a gap up to get back to this gap level at $3.03. So $3 can serve as a floor before moving higher, like up to these levels that I have grayed out because they're kind of in the distant future. But I am hoping for an up move following earnings. But just because I hope it doesn't mean it's happening. And so I do think it is good to be preparing for the downside, like to 176 with this gap fill, if not lower. So do keep that in mind. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.